JB here. Hope everyone's doing outstanding. Friday, February 27, 919. Really quick rain here. Don't have too much time. S&P in the red here. Down. Well, small caps down 1.5%. S&P futures down about 0.9%. It was funny coming into today after yesterday's, and well, actually this week's ping pong session. The S&P and Nasdaq were pretty much flat on the week despite the turmoil. And today, another day to the downside. We'll see how things play out. A lot of news, so a lot of stuff going on. to me, it's like the PC data, CPI, GDP, the Fed, all that stuff becomes somewhat the noise, and kind of the real thing has been these company updates. So a lot of things yesterday. You had XYZ reporting their earnings after the close. That's always a name I've loved, right? But it's a name, it's got its hands in a lot of different spaces in the crypto and the payments and all that stuff. They just never can get their story going, right? And so after the close yesterday, they announced a 40% cut in payroll, right? And the 40% headcount, staffing headcount, about 4,000 jobs. To me, that's like, how do you have a business that you can cut 40% of your payroll and then not go bankrupt, right? I mean, that to me, that's like a company who's bankrupt cuts 40% of their payroll and just to get the product sold on the counter, right? Just like a Kmart back in the day. Oh, we're cutting our sales force. We'll have a skeleton crew, right? Twitter wanted to get acquired by Musk, and then he cut all the staff. Well, he was able to get it working. So to me, it's less about the AI. It's more about just a horrible leadership that they allowed the staffing to get to a level that they can cut 40%. And I'm not saying it's okay. Of course, there'll be some hiccups, but that's just mind boggling. So is that more of a function of the tariff? I mean, the COVID days of this easy money spending that, someone didn't have those hard conversations with employees, right? I mean, it's not easy to tell someone they're fired. So to me, that's just, so of course, what in spite of what they'll do now, because the environment's all about AI, it's going to be, that's what it is. This cut is AI. And maybe it is. Maybe I'm not seeing the big picture. Of course, some of it's got to be AI, but to me, it's just a complete leadership issue. So that's that. Then also you have CoreWeave after the close yesterday, and CoreWeave has some issues. You have these data centers that you have the owl, the loans, all these different circle jerk things that are at play. The financing, get the data centers. Who gets the revenues? Do you have to raise debt? Is it cash? Is it Google? So it's like I call it the great circle jerk. If I go on a rant for an hour doing it, I'm sure I could. But CoreWeave is might be the proxy for the entire circle jerk. And I thought maybe it was Oracle, but there's concern. And you saw some of these names gapping lower in the after hour session. I'm like, why are they gapping lower? The Adobe's, the Oracles. I'm like, oh, it's CoreWeave. So we'll see how that plays out. That might be I wouldn't call it the canary in the coal mine, but NVDA Jensen speaks very highly of CoreWeave. Maybe I don't see that right. But so then you have that, and then today PPI data. Well, I don't know why I keep calling it a PC data, but that came in hotter than expected. The PPI is kind of like the forward-looking inflation, right? That's the producers. So that's before it gets everywhere. So definitely something to keep an eye on. But anyway, futures are in the red here this morning. And then it's like you look at a lot of these stocks, a lot of them, their pincher charts oversold, you would think. And then you look at the market, like we're stone throw away from all-time highs yesterday. So it's kind of like a riddle me this, riddle me that. Are we setting up for a bigger move to the downside, and the names that haven't sold off are going to sell off as kind of like a collateral damage situation? Or are we finally going to have, I don't know if it would be capitulation today, or are we going to be finally in a moment where, okay, we can find a bottom? So I hope so. I always look at the positive side, glass half glass half empty scenario, glass half whatever you want to call it, with a grain of salt. But also take a look, like the 10-year yields, right? The mortgage rates, 3.5-year lows. The 10-year yields keep dipping, and yeah, I mean GDP has been strong, or at least until the last read. So that's kind of in the back of my head. But the other side is like, okay, maybe if we are in the midst of a downturn, how are we going to take advantage of it? So yesterday, I'm watching the pull at the open. I was worried some of these earnings, especially I remember back in the day with Apple, you kind of worry that there's going to be, even on a good report, it'd sell off. I remember Apple would have these monster reports and close down. You're like, why is it sell off? Sometimes just that's what the markets do. Markets, stocks go up and down, and then you look, 6 to 12 months from then, it'll be higher than where it was. I don't know if that's the case with NVIDIA, but you saw that sell off, and then all these other names selling off in the space. And me, I'm always looking at the Broadcom, Land Research, ASML is kind of like put hedges. But I was looking at Reddit, right? So I got the Reddit calls, played those for some nice profits, and I missed on getting some ASML puts. Thankfully, I was looking in the afternoon. I think it was 11:30 or 14:30. I almost got some 1,300 puts. So that might be a trade today. We'll see how things play out for some lottos, but they're expensive. But those have been holding up well, because I think if you look at ASML, it's like just a great fundamental story. But anyway, in the nutshell today, just watching 677's kind of line of sand on the SPY. We break under that. I'll be getting some put hedges into next week, probably the Visa, the MasterCard, the JP Morgans, or some of those financials, names that haven't really sold off too much. On the flip side, maybe this morning is kind of like the capitulation. We get a nice little bounce in some of the names. So yes, they gave us a glimmer of hope with the software again. Is that a tease before the next leg down? I guess we'll find out here today. ServiceNow, Salesforce, Workday, Team. I mean, here's now $109 close. It's down to 103. So is that it? Or was that the bounce? And we're going to go back up. It's going to break 100. Definitely be watching that here today. The thing is, the premiums are expensive. So I always talk about instead of trying to play puts for downside, like if I think we're going to get down to 677 to bounce, I'd rather save some capital to nibble some calls for some lottos. On the flip side, if things, start to accelerate to the downside on that 677 break on the SPY, then I'll be again in put. So, all right, that's overall market. Quick on individual names. Disappointing here, Roblox, right? Thankfully, I was able to get some of the Roblox calls out to cover some costs yesterday. I was hoping for some follow through. 50-day moving average right there, 74.52. Big spot. If it gets over that, I think it's off to the races. Hasn't seen that level since November. But to me, it's like those names, the Roblox, the Lemonades, the Reddits, the names that really shouldn't have sold off with the software re-rating, repricing, revaluation, whatever we call it. Those should be the names that really go bonkers when we bounce. So that's why I continue looking at those names, because I think those will be the ones that outperform. That's Roblox. So then GLW, right? And GLW was selling off yesterday with the rest of the names, was down to 150. I'm looking at the premiums. It was still a 14% implied move on the March strike. So in one hand, I'm like, do I exit and then try and re-enter because the premiums are expensive? It's probably not the best way to find an entry. Or do I finally close out the rest of the March 150s and then revisit? So the thing is, it could sell off more, but you got to hope the premiums hold up. But if the premiums don't hold off and it sells off more, then that's a slippery slope. So can't kick yourself in the butt for locking them in. So I locked the rest of the 150s in for close to 400%. And I still have those 215 FOMOs that I already locked in to cover costs. I'll just continue to hold those. And then if I see an opportunity to nibble some calls for upside, I still think if the market doesn't go nuts, that you can see that trade into 200 plus in the coming weeks and months. So I'll continue to look for opportunities on that one. So that's GLW. Other names here, Serve Robotics. NVIDIA had a nice little update in regards to robotics and how Serve uses their platform. What do they call it? It's not Ernie. Ernie's Baidu. I forget what they name it. NVIDIA, let's see. Did I have it up here? No, they don't. What do they call it? Sorry, I'm running out of time here. Jetson? Origin? I don't know what they call it. But nice little thing there with NVIDIA. And, at some point, Serve takes off, but it could have 100% in cash of its valuation, and it still might trade lower. That's kind of the environment we're in. But to me, once that environment changes, some of these names are going to be great opportunities. So that's Serve, GLW, ASML, Visa, MasterCard, Roblox. I'm trying to think of, the TravelZoo, right? So, if you've been in this chat room for a while, my bull case on TravelZoo. They have an active stock buyback program. The company generates $1.5 million in cash on a quarterly basis. So, it's a $70 million company that throws off $6 million just in cash a year, right? So that's remarkable. So it's a cash cow. It just trades like it's going to be a zero, right? And they just did a membership platform they started the start of this year or last year, and it's starting to bear fruit. They actually raised the price from $40 a year to $50 a year. And it's one of those names that people look at the earnings and say, wow, horrible earnings. But it's because the back end of the subscription model requires them to capture the cost at the start. So the EPS looks horrible. But fast forward a year from now, and the EPS is going to be like $2, $3. It's going to be crazy. But maybe folks don't see that. But anyway, so I was looking at the calls. And, once those 750s looked interesting on a risk-reward basis, got those. And, that's it. If I get a chance to lock some in, I will to cover costs, but I'll be patient there. Let's have a great day, folks. I'll be back on the audio later. Rock and roll.